All right, good. So here's my table of contents. I'll just touch a little bit on global forecast and then journey of Nigeria's economic crisis. I'll talk about the key challenges that we're facing, and then deep dive into inflation, exchange rate, budget, economic growth, and then a little bit in the bank on the bank recapitalization. So this is the World Economic Outlook for global economic outlook as detailed by the World Bank and IMF. I'm sure some people may have seen this already, but as you can see, globally, the world is meant to grow at about 3.1%, according to the IMF this year. And then they move to the United States, which is typically the bellwether for the global economy. The country is expected to grow at 2.1%. For a large country like this, pretty good, because typically the US have always grown below 2.1%. But over the last few years, we've seen the US compete favorably with the emerging world, emerging markets like Nigeria that has witnessed very low GDP growth rate. And of course, in the euro area, they're still struggling a little bit there. Projection is 0.9% growth. And of course, if you come down to sub-Saharan Africa, where Nigeria belongs, expected growth is around 3.8%. Not enough for countries that you expect should be growing at a faster pace. And of course, if you look at the emerging market, emerging Asia, they seem to be doing a lot better at 5.2% in terms of the projection that the IMF provides for them. And of course, Middle East and Central Asia, 2.9%. Very unsure if they can still hit this number. I'm sure when they send in revised numbers very soon, probably be lower than this because of a lot of the skirmishes going on in the Middle East at the moment. And of course, Latin America and the Caribbeans come in at about 1.9%. So that is for global focus. Now, how did we get here in Nigeria? A lot of people tend to forget how we got here. I mean, the story of Nigeria's economic crisis didn't just start last year, and it didn't just start 2 years ago. You can trace it all the way back to 2014, 15, when we started witnessing the start of the oil price crash. And of course, if you all remember, at that time, the exchange rate was around 160 or so to the dollar, 160 naira to the dollar. And then we had the oil price crash, and we had the very first naira devaluation that Ugodre did. I think it went to 197. And then, of course, as we were dealing with all that crisis, the 2015 election came in. And of course, by 2016, all hell let loose. Capital controls came in. We immediately got into a recession. That was also when we had the Brexit votes. And then the militants also now started disrupting crude oil production within the country. And that has basically precipitated into every single thing that we've seen. By 2017, we started seeing a little bit of economic recovery, different kind of policies. We started hearing about banned items, capital controls was in full flow. And that was also the ascendancy of the version of the crypto boom that we're seeing now. All started in 2017. And then, of course, we started seeing a little bit of exchange rate stability when they introduced the I&E window. And then in 2018, the Buhari administration came in with border closure, and then insecurity increased as well. If you all recall, there was a lot of kidnappings, there was a lot of bombings, especially in the Northeast. And then we started seeing a little bit of economic growth as the exchange rate sort of stabilized. And in 2019, because a lot of the exchange rate stabilization that we had then was mostly due to selling OMO bills by the central bank. And the central bank was essentially pushing out high interest rate to attract foreign investor inflow, and we had a bit of stability at that time. And then that was also when we witnessed the very first VAT increase from 5% to 7.5%, if you all recall. So in 2020, as it looked like we're kind of recovering, and then the CBN was also winding down on OMO bills because it was pretty expensive. They have been doing it for about 2 years. COVID-19 struck, and then we all now went down again. And the oil price, of course, crashed, and then you had the end-size crisis, and then the economic recovery started gradually again in 2021. And by that time, it looked like we were already getting into election mode. Inflation now started becoming a concern because we started seeing inflation creep up gradually from 2021. And of course, the exchange rate crisis now boiled over because we have now gone from about 360 that we had for about 3 years, for about 2 years stable, to over 400 and gradually getting to 500. And then people really got tired, and then the jackpot restarted. And so this essentially has been where we are. I'm sure we're all familiar with with at least the last 2 years, so I'm not going to delve with it. But very important to understand how we got here, because if you know how we got here, then it's easy to know how we get out of here. And so at Nairametrics, we like to sort of distill the challenges we have in this country into three broader buckets. So the first one is we're in a high inflationary environment where you have high energy prices, driven by high energy prices, currency depreciation, money supply, and of course, insecurity and logistics. So that is basically the challenges around the reasons why we have high inflation. Of course, we also have fiscal crisis where we have budgets that have been largely ineffective in terms of driving economic growth. We have high fiscal deficits, and of course, our public debt is growing, currently over $100 billion. And then with all of this, we're still having tepid economic growth. Like I showed you, we are not growing as fast as we should grow as a country, despite a lot of the money that has been spent. And so there's also lack of ease of doing business for businesses. With crude oil output, we're still doing about 1.314 million barrels per day, when we should be doing about 2 million barrels per day. Government policies weren't really working. And of course, we're also seeing weak manufacturing output. So this essentially is the challenges we have in Nigeria, if you want to sort of summarize them into three. And then what has the government been doing? You have a new government, going to be a year in May, but they've been doing a lot of work just to try and contain the issues and then get us out of here. So on the inflation front, you've seen policy actions from the central bank. This is essentially Nigeria's inflation. You want to break it down. So you can see it's mostly food. Food is the major contributor to inflation in Nigeria. And of course, we're also now seeing core inflation, which is typically what I like to use as the benchmark inflation, also creep up. Core inflation now is at about 24.8%, 24.6%. So typically, lending rates are usually much higher than core inflation. So banks will typically benchmark lending rates at least 5% higher than core inflation rate. So this is essentially where we are in terms of inflation. Of course, food inflation, we're gradually hitting 40%. So what has the CBN been doing? Increase MPR to 24.75%. They've also increasing MPR twice already. In fact, MPR has been increased since last year. Emefiele started the increase, and then Cardoso has continued with increasing MPR just to contain inflation. Of course, CRR now 45% and liquidity ratio 30%. They've been mopping up money supply in the economy by issuing out treasury bills and OMO bills. They've also stopped ways and means borrowing, which a lot of people like myself believe contributed to the increase in money supply in the country. So that is now being curbed. And of course, there's a lot of social safety nets out there just to help pushing the effect of a lot of the policies that the government is pushing out. And of course, there's also a lot of supply side initiatives that the government is also putting forward just to sort of help things. So such as, of course, roads and trying to curb insecurity, a lot of efforts around the technology space, which I will address as we move on. Now, exchange rate, the big elephant in the room, because a lot of people believe this is one of the reasons why we also have high inflation rate. As you can see, this chart here, it gives you the trajectory of Nigeria's inflation rate. This is the official rate, by the way, in green here. As you can see how we've been going. In fact, at some point in February, if you all recall, we're hitting 1.6 plus. And of course, on the parallel market, it got to as high as 1.8, almost hitting 1.9. But over the last few weeks, we've seen the Naira fight back with all vigor. Naira is fighting back. So gradually dipping to below 1.3. This was as of March. So we're in April already. We're seeing it at about 1.250, likely going to fall even further as we go on. So what has the government been doing? The 5-day exchange rate. They introduced, sort of reintroduced NAFED. They brought back the BDCs. In fact, there's been a lot of reforms in the BDCs aspect segment. If you all recall, they even canceled. I hope you guys can still hear me, Rotus. Hope you can still hear me.
Yes. Loud and clear, loud and clear.
Oh, fantastic, fantastic. All right, so we've seen the introduction of BDCs, and of course, they've canceled a lot of licenses, all those very funny BDC names that we heard. So those guys are out of the window. We've also moved to a more market-determined exchange rate, even though the CBN will tell you, look, it's not a free full float, but it looks like a semblance of a free float, where you're now seeing the official exchange rate even weaker than the black market rate. Of course, we've seen new guidelines for IMTOs. We've seen the removal of FX caps, clamp down on Binance, which I actually think is one of the major reasons why you're seeing the exchange rate stabilize. That essentially just shut out a window of trading exchange rate that often plays with the exchange rate itself. So that window has been shut. So No more benchmark of Binance as determinant of exchange rate in the parallel market. So this has now been off. And of course, you've seen a lot of increase in interest rates for T-bills and automobiles. This essentially has sucked out Naira from the economy. And when you suck out Naira from the economy, there's not enough money to buy dollars. So speculators take heat. That's what typically happens. It's been expensive, like we said, costing a lot of money because you have to pay high interest rate for this. So as much as this is also fighting inflation, it is ultimately meant to bring down the weakening Naira, to strengthen the exchange rate. But of course, there's also been a lot of payment of FX backlogs to airlines and all that. So you've seen a lot of all this happening, and you're already seeing the effect. You can't deny it, even if you're not in support of the CBN policies. It seems to be working. As you can see, this chart proves that. And so what else in terms of the fiscal side? This is where I actually think Nigeria has a lot of problems. As you can see with this chart here, by the way, you can get all these beautiful charts on nairametrics.com. Let's go there. It's a Nairametrics website. So that's where we have a lot of all these charts. So if you can see, as you see, over the last, 6 to 7, 8 years, we've seen that on the fiscal policy front, we've been spending more than we earn. So as you can see from 2020, I think this thing all started around 2016, 2017. As you can see, recurrent expenditure way higher than revenue. And if you add non-debt recurrent, if you add debt and then you add capital expenditure, you see that we've been spending more than we have. And so we've been incurring huge fiscal deficit. And go and ask any economist where you have huge fiscal deficits, it tends to deliver exchange rate weakness. So your exchange rate tends to suffer at some point. And this is what has been going on. This is up to 2022. You can see here, 5 trillion versus almost 17 trillion. So the gap is huge. And even in 2023, we're already seeing that there's a deficit financing of over 9 trillion naira, and it could even get higher than that. And so this, I think, is a huge problem that the government needs to sort out. And this is essentially the 2023 budget. As you can see, there's a lot of deficit spending here. The government is looking to borrow 8.2 trillion just to plug the deficit hole. And this is if it is even able to raise the entire amount of money that it hopes to use to fund the 2023 budget. But what has the government been doing since to also sort out the fiscal side? It's not like they haven't been working. We've seen the removal of fuel and electric. Just recently, electricity subsidy, that has been a huge drain pipe for the government. So they've essentially taken that out. We've seen them end intervention funds as well. That is also where they tend to always increase their borrowing. And so they've stopped that. There's a lot of tax reforms being implemented by the Taiwo reform panel. We've seen a lot of work that they are doing. So reforms going on in there. It's huge revenue mobilization. I'm sure every day you see in the news how much custom is raking in, how much FIRS is raking in. These guys are under immense target to raise revenue. And you've also seen gradual implementation of the Oron, and the government has now decided to do something about it, even though it's not as aggressive as we think, but at least there's a lot of work going on in that direction. So you've seen a lot of work there. The increase in crude oil output gradually going up, especially now that crude oil prices is hitting $90. So maybe government revenue is going to stay on. And guess what, guys? Once you start to see crude oil hit $90+ and we see our output increase, trust me, the exchange rate would be stable. There's just certain things that determine how your exchange rate moves, regardless of what happens. So these are very good signs. So if you're a speculator out there, man, you got to be worried, because with crude oil output going up and the crude oil prices going up, that it means that Nigeria's external reserves would likely continue to increase. Of course, you've seen a lot of reforms as well. A lot of people call it audio. Looks like audio, but solid mineral sector reforms. We don't know whether it's going to yield any fruit, but that's what's going on. That's what they are doing, at least. A lot of bilateral cooperations. We've seen Nigerian government traveling left, right, center to the Middle East, to China, to US, all trying to look for some kind of bilateral cooperation that will see foreign investment move into the country. And of course, we're seeing gradually, not as much as a lot of us would want, but better coordination between the monetary policy, between the monetary and the fiscal side of the government. Remember, Cardoso said it, that no matter what he's doing, it needs the fiscal side to also step up. So we're seeing a little bit of that. It's just last 2 weeks that they set up a panel that include the private sector. So I guess those guys are getting to work. So we hope to see a lot more on the fiscal side. Now, in terms of Nigeria's GDP, oh my God, looks like I've gone past 10 minutes. In terms of Nigeria's GDP, a lot of work going here. As you can see, this is our GDP numbers. The government wants us to hit 1 quadrillion naira, because, I mean, if you use 1,000 naira to dollar, that's essentially what it is. So one trillion in GDP. We're currently at 225 or so trillion naira in terms of GDP. So it's going to take a lot of work to get it. But one question for everybody: if this exchange rate was 220 to the dollar, wouldn't we have been at $1 trillion already? It's always something that just pops in my mind. But anyway, let's go on. So in terms of policy actions, monetary policy reforms, you've seen a lot of that. You've seen a lot of efforts to attract foreign investors. They are continuing the Buhari administration's agri sector reforms, albeit in a different form. We're seeing a lot of diversification away from crude oil audio because we're not really seeing the full action in place. We still rely a lot on crude oil here in Nigeria. They're trying to harness the crude oil sector reforms. We've seen implementation of AFCA a little bit slow, but I think these are some of the things that they require to drive Nigeria's GDP forward. Infrastructure and construction projects, I think this is going to be one huge area that you see economic growth come from. And of course, there's a lot of IT initiatives, whether it's a natural AI strategy or 3MTT, cloud computing. These are all efforts, drawn towards pushing the economy forward. And you also see a lot of focus on local manufacturing and, of course, lastly, banking sector reforms that the government, not just the central bank, believes should be the key driver of Nigeria attaining the $1 trillion economy that we want. Now, this is just a little bit of an idea of what Nigerian economy has, what our GDP has looked like over 3 essential periods. So this is 2016, this is 2022, and this is 2023. And as you can see, in 2016, trade was like the number one, the largest sector in the economy. But trade has been toppled by crop production ever since. So crop production is now 42. So it's gone from 18 to 42. Now, why do you think that is happening? That is also because of a lot of the focus of the government. So when government focuses a lot on one sector, you tend to see that sector grow. And so you've seen crop production sort of double and is the largest in the economy after 2020. Even after 2023, you're seeing at 47. Trade still growing, but not as huge as crop production. Nigeria is basically a service-based economy. And then you've seen telcos. Telcos used to be 8.5 trillion. Telco just recently toppled construction at 25.2 trillion. So you can see tech is huge in terms of how Nigerian economy is growing. And then construction, which is also another sector that has seen huge growth at 22.1 trillion. So look at all of this and ask yourself, which sectors do you think is going to lead Nigeria in the next 5 years? Which ones are going to be the top 5 or top 10? My bet, looking at education, I think education is going to be a huge mover. Cement is going to be a huge mover. Financial institutions with this bank recapitalization going on is going to be a huge mover. You want to check out that sector. Electricity sector as well, likely going to be a huge mover. And so these are the sectors that I think are going to see huge growth over the last few years. I mean, think about it. Look at education sector, just 3.1 trillion in terms of size. You think that this would also grow. So this is Nigeria, and you can see things change. See how it was. Cement was just 20 after 2016 at just less than 700 billion. But look at where cement is today at 7 trillion in less than 10 years. So these things do happen, and expect to see a different composition of Nigeria's GDP in the next 10 years. So now we're quickly now going to bank recapitalization, which our panelists are going to speak on at some point. We all see the objective of the bank recapitalization, as the central bank governor has spelled out, said, is to engender the emergence of a stronger, healthier, more resilient banks to support the achievement of the 1 trillion economy. So you can see that is why they want to raise this money. That's what they claim. But if you now look carefully and see why now, it sort of gives you the real reason. You see, they said is to further strengthen Nigerian banks against external and domestic shocks, as well as enhance the stability of the financial system. That sort of makes you understand that some banks are not really strong like that. They're not really strong. So the CBN really needs banks to recapitalize so that when they release the forbearance, they can absorb a lot of the losses that are coming. That is what a lot of us think is also the major driver for all of this. And that is why there is no retained earnings in the calculation or the composition of what the central bank calls the share capital. And a lot of banks don't like it. I'm sure the panelists will delve into that at some point. So in terms of how much banks need to raise, I think a lot of you have seen this table before. This is just a larger table. We included a lot of banks here, so you can all have an idea of how much minimum 4.3 trillion is going to be raised. This is essentially going to change the Nigerian economy over the next 1 year or two with a lot of activities. Trust me, Nigeria can raise this amount of money, you can't imagine the economic activity this is going to create. Whether you like it or not, there's going to be business for a lot of people. So this is one to look out for. So what are we going to expect? What to expect? Is Nigeria going to be able to address the root cause of our challenges, the three buckets I mentioned? That's what we need to know. Is inflation going to drop to 25% by the end of the year? I don't know. I guess the panelists would also discuss it at some point. What about money supply? Is it going to keep growing because it's gradually hitting 100 trillion? Are we going to see that 25% of GDP, which is typically the acceptable number? No. Of course, what growth areas is the government looking at? Is it going to be health? Is it going to be sports and entertainment? Of course, what sort of progress are we seeing on the technological front? You're seeing the Minister of Tech, making a lot of noise and doing a lot of work in terms of trying to push the tech narrative in the country. Let's see how that pans out. And of course, how would access to the capital markets be simplified? We do believe in Nairametrics that no matter what the government is doing, the capital market needs to be the agent of economic growth. If a lot of all this money is not going into or passing through the capital market, we're not going to reap from the benefits of it. So we strongly think that the federal government should make sure that all the companies and all the organizations that are going to be integral to its economic growth plan should have some form of listing in the capital market. So Rotus, that is my presentation, and I hope that this will set the tone for the discussion that is about to start. Thank you all very much. I know I've gone past 10 minutes, but indulge me, please. Thank you so much.